Hi, everyone, and welcome to today's webinar, Gold and Silver 101. I'm Machi Block, Senior Director at American Hartford Gold. We're the nation's largest precious metals dealer, and for over a decade, we've been helping countless numbers of Americans like you and I to sort through the noise in the market and to protect their retirement savings with physical, tangible gold and silver. And today, we're here to talk about gold, silver, the economy, of course, and I'm sure that you, like me, and like all of us, have some honest concerns when it comes to what's been going on with the dollar, the mounting government debt, war with Iran, and the very volatile and unpredictable stock market. And you've seen gold and silver growing, maybe from a distance, or maybe you already own some, but you want to know more about where they're headed and whether now is really a good time to have them. And so we're going to break down the economic landscape, how you can invest into precious metals, why you should, and we'll help you get to know our company and, of course, why American Hartford Gold is the right choice for you when you're investing into precious metals. So take a minute. I'm going to let everybody kind of get settled. A few more people join the stream. And while we wait, I would love for you to write a comment. Let me know where you're watching from and whether or not you've bought gold before or if this is your first time, and then whether or not you've actually joined us on a previous webinar. We do these monthly. We want to keep our clients and our prospects up to date on what's happening in the economy and help you better understand gold and silver. So I'd love to hear if you're new with us or if you've been here before, and if you're new to gold or if you already own some. And also let me know what brings you in today. Is there something that you're seeing in the economy that has you looking at precious metals specifically? Is there something that you're hoping to learn while you join us here today that you want to understand better about the economy or about how precious metals work? And if you would just leave some of that in the comments section, I'll get to that, and we'll do a question and answer a little bit later in the stream as well. So I appreciate y'all being here with us. Now, while we're getting settled again, a lot of people don't really know that when you buy gold and silver, you can get physical, tangible gold and silver shipped right to your home or put into a retirement account. That's primarily what we're talking about today, is those two options. But you actually get the real thing. And I have to warn you, when you actually have real money and you make a shift from just having paper assets or ones and zeros on a computer screen, and you get to hold some of this in your hand, this is real wealth. This is something that becomes a little addicting, and the more you get, the more you want, because you realize that nobody can take this from you. It's actual physical, tangible wealth that's not tied to somebody else's liability and not under the control of anybody else. So that's what we're here to talk about today, is what can real wealth do for you? How can it give you a hedge when the economy is so uncertain? We have David from Idaho, used to buy American Eagle dollars, just bought silver from you yesterday. David, we appreciate your business. Welcome to the webinar. Gordon from Kansas City, I have no gold or silver. I want to protect my investments in the market, a 401k. Fantastic, Gordon. We'll talk about that, exactly how you can move funds out of your retirement account with your employer into a self-directed IRA to own physical, tangible gold and silver. That's a tax-free, penalty-free move. It's very easy, and I'll walk you through all that. Curb says, hello from New York. Great to have you. Joni from Tennessee, don't own any, but curious. Good. You're going to learn a lot today, hopefully. Francis, hello, Francis from Florida, new to gold, want to protect investments. Great. And Charles, first time trying to figure out rolling a 401k over into silver or gold. Great. So I'm going to talk about all of that. And again, before we get into the heart of today's webinar, I'm Machi Block, Senior Director at American Hartford Gold. My whole job here is to help people like you and me to gain an understanding of and to invest into gold, silver, and precious metals. And today, I'm really excited to take you through the essentials of owning physical precious metals, why they really are such a crucial cornerstone of any well-built portfolio in this current economy. And that's no doubt why you're joining us. In our opinion, it's more important than ever to understand how gold and silver can serve as your financial safety net when all other safety nets seem to be shifting and kind of breaking up right now. And so whether you are a seasoned investor or you're just beginning your journey, our goal today is to provide you with clear, actionable insights on how to secure your investments with gold and silver, and of course, why you should do that as well, and understand the times that we're in. And when it does come to finances, we're all very well that it can be very confusing, right? And many clients are unsure about how to proceed with their life savings. This is a big deal. This is everything you've worked your entire life to build up. You're a little concerned about where the market is headed, And I get that. And that's why we do these webinars, to help provide you with some much needed clarity when there's so much confusion and uncertainty in the markets and the economy out there. And we want to give you a good sense of why to buy precious metals in these current conditions. Now, at any point in time during this webinar, if you want to chat directly with our account executives, I would encourage you to just jump off and call the number that's on the screen. It's 866-607-2447. You'll get a replay of the webinar, but you can get into a more in-depth specific conversation with our account executives that are on standby, and they can just kind of take on your situation and help you understand this one-on-one. So don't be afraid to leave the webinar, but make sure to call the company and actually take that step. Now, leave your questions in the message board. I do have some moderators that are helping me, that are sending me questions periodically. We'll also do a time for Q&A. But if you have a really specific question, one of our moderators might pull you into a side chat just to answer your question more one-on-one. So keep that in mind. Anything that you write is very helpful for us. It lets me know how to tailor these webinars as we go forward in the future. Really helps me understand what's important to you. So go ahead and leave those questions. I'll try to answer them as I go, but we'll also carve out some time. So as we go along, just write down anything that comes to mind. That's very helpful for me. Last piece of this, it's very important that I mention this is not financial advice. I'm not your advisor. I don't know your whole financial situation. Anything I say is just helping you get a sense of what's going on in the market, how gold and silver work, and trying to get you education. But you always have to do your own research. And obviously, you know your situation better than I do. So make your own decisions. I'm just here to kind of guide you to port, if that makes sense. But it's great to have you all. And as we get into it, in these webinars, I usually take my audience on a walkthrough of the devaluing US dollar. That's a big one right now, the climbing government debt, the stock market outlook, because that's always giving us pause, and then performance on gold and silver. And so we're going to go through all of that today. But today is a little bit more unique because we're in the midst of this war with Iran, and times are very uncertain. And really, the Iran war is changing everything in the short term. And so I really want to focus on this because it's relevant to all aspects of financial life and what we might expect in the immediate future. But I also want to make it clear, zoom out. We're talking about the micro, but you have to look at the macro. There's so much more going on big picture that are outside of just the immediacy of the war and what may or may not happen. This trend has been set. We're in a secular bull market for precious metals, for commodities. Gold and silver are doing incredibly well for a reason. And all of these conditions, they're not just coming on the table today or in a week. They've been here for years. They've been mounting, and we see the results of some of these actions. And it's this long-term perspective of where gold and silver are headed. So don't get caught up just in the micro as I talk about that, and I will give you a big picture as well. Now, this year so far, we've seen the stock market climb to new record highs and then begin to build in tremendous volatility and uncertainty. The last few days, especially up, down, big drops. It's very concerning, which leaves most investors a little nervous and worried about how they're positioned. Again, most of us have the majority of our net worth, our retirement savings, all tied up in the stock market or bonds or dollar-based assets. And again, when the situation's shifting, that gives us pause. We also have inflation. It's back, and it's spiking with energy prices, and it's expected to get much worse. So we've been battling inflation for the last handful of years, and it seemed like we were doing okay, and now it's right back on the table as a major concern. The government debt, again, has soared past $38 trillion. Now, I don't know about you, but that number to me is absolutely unfathomable. We're adding $2 to $3 trillion to that every single year, and just imagine where we'll be in the next decade. What's going to be left of the dollar? We'll have $60 trillion and beyond of government debt. Again, that number is just not even something I can comprehend, let alone being at $38 trillion right now. So there's huge issues there. Now, just with the first weeks of war with Iran, we've significantly increased our government's expenditures. Meanwhile, we have foreign investors and banks that are rapidly losing their appetite for U.S. treasuries, for bonds, for U.S. debt, and they're specifically pulling back from the U.S. dollar as the world reserve currency. Now, this has been a trend, again, that's been set, but we see that ramping up. And the U.S. economy is teetering on the edge of a significant recession, with jobs reports showing significant weakness and consumer debt putting Americans into a very restrictive hold, and that consumer spending is beginning to slow down, which again typically signals a coming recession. China, additionally, has dumped over half of their U.S. treasuries, which is amazing to see. Gold has just replaced the US dollar as the number one reserve asset for central banks, usurping the dollar. It's the first time in 40 years that gold has actually surpassed the number of holdings compared to the US dollar in central bank reserves. Now, the ups and downs of the economy, the debt, the dollar, the stock market, this is all a very perfect case study in why investors are increasingly wanting to remove themselves from traditional paper assets and rather hold something real and tangible outside of the system, like precious metals. Now, gold last year ended up over 60% up. Silver was up 140%. That was just last year. If you were lucky, the stock market was up about 18%. And so what we see is that precious metals are far outperforming traditional investments, and they're offering substantial safety at the same time. So again, when investors look at their traditional options, stocks, bonds, equities, the dollar-based assets, we see all the risk that's getting built into there with the economic conditions, and they're only performing to a certain degree. And we see on the other side, gold and silver, which is meant for safety and protection and preservation, and gold and silver are far outperforming, 3, 4, 5 times greater than what your traditional investments are doing. It's kind of a no-brainer to start looking at precious metals as a way to get a hedge, as a way to get protection, but also as really the best investment on the table right now. Now, this year, we've seen gold break $5,500 an ounce, and silver has broke $122 an ounce. And we've recently seen a pretty healthy correction on both metals, and I'm going to talk about why that is later. We've seen the metals pull back, but we're just getting started. Again, gold's up about 10% so far this year. Silver's up around 8%. And if we look at gold last year, we started at $2,850 an ounce. Now, we had UBS, Goldman Sachs, JP Morgan Chase, Citigroup, all talking about gold ending last year around $4,200 an ounce. They nailed that to the dollar. They said gold would be around $4,900 an ounce by the end of January. We hit $5,200, so we were ahead of schedule. They're saying $7,000 to $8,000 an ounce by the end of the year, and then $10,000 an ounce on gold beyond that. Now, we have to realize that's all about the devaluation of the dollar, okay? Bank of America also says that silver will reach somewhere around $309 an ounce potentially just this year. Citibank coming in a little bit more conservative, expecting silver to break about $150 an ounce. So either way we look at that, that's pretty substantial growth across the board on precious metals, again, year after year after year. And again, why is this? And what we see is it all comes down to geopolitics, to wars, to political instability, to the devaluation of the dollar, central bank buying, which they're loading up on both gold and silver. Silver has become recognized as a very critical material that's under severe shortages, and foreign investors are losing their confidence in the US dollar. So there's this massive shift. There's a huge bubble in the stock market, and gold and silver are being seen the world over as the number one safe haven asset for investors. It's replacing treasuries, which were typically that safe haven and bet. Now, Ray Dalio, if you know him, he's the founder of the largest hedge fund in the world. He said at the World Economic Forum last month, I would have a greater than normal amount in gold. Gold is the only non-fiat, non-printable money. Entire shift of the monetary system is happening right now where central banks and sovereign wealth funds are moving into gold. Now, a couple of key points before I again explain kind of how the Iran war is impacting the economy and investors. The devaluation of the dollar is significant, right? The US dollar just had the worst year last year in 52 years. It was down 11% just over the course of last year, which means that our purchasing power on the dollars that we hold have lost 11% in a year. That's substantial. And it seems that the whole world, again, is walking away from the US dollar as a world reserve currency. The Trump administration is actively devaluing the dollar and cutting interest rates, or at least working towards cutting rates, trying to turn the U.S. into the manufacturing and producing nation that can export. We have to have a weaker dollar in order for that to happen. The dollar hit a 4-year low about a month ago. They asked Trump about it, and he said, that's terrific. That's exactly what we're going for. We're going to see the dollar weaken further. They're trying to actively do this. Now, we have to think about the debt as well. We've added the fastest $1 trillion to our debt last year since the pandemic, $38 trillion and climbing. Each year, we're running a minimum of $2 trillion in deficit. And in just 10 years, again, we'll be at $60 trillion. So there's this overall loss of confidence in the dollar. Marco Rubio came out about 3 weeks ago. He said Brazil and China have struck a trade agreement to settle trades outside of the US dollar. We won't have the same positioning in the world in 5 years down the road. We have to get ready for this. This is coming from the heads of state, right? Talking about where the dollar is headed and preparing for a world where the dollar no longer holds that prominent place. And that's going to impact all of us in a major way. It's why people are moving into gold. It's why investment banks are moving into gold. It's why central banks are loading up on gold. It's why governments are buying gold. The world is changing. And it's further worth noting again that inflation has no ceiling because the dollar has no floor, which means the dollar can go down really to zero, which means that inflation, hyperinflation can kick in, the purchasing power continues to erode, and gold and silver are inversely related to the value of the dollar. As the dollar goes down in value, gold and silver go up. Now, central bank buying is happening. 96% of central banks are buying gold and adding to their positions. This is the highest number of banks in history. They're buying record amounts of gold. And so far, this has been a 5-year trend. We're moving into the 6th year right now. So they're just increasing the amount of gold that they continue to buy. Of that, about 20% of central banks are decreasing their exposure to the US dollar. Now, last year, that was 11%. So that's a very worrying trend. The dollar is the only currency that central banks are actually decreasing their exposure to. And again, the first time in 3 decades, gold is the number one holding in foreign reserves, no longer the dollar. So that trend is something that we should really pay attention to. So gold is obviously doing incredibly well. I'll talk about silver briefly here before we get into the rest of it. Silver has a huge shortage. It's both a monetary and an industrial metal. We're using about 250 million more ounces per year than what we're able to pull out of the ground, just on the industrial side alone. We've ran that deficit for 5 years. There's this tremendous shortage. And you think about that as we go forward into more electric vehicles, solar, data centers, the space race, AI, everything is using silver. And we're already running out of silver above ground. And so you think about the trajectory of where silver is headed. It's being declared a critical material. Central banks and governments are loading up on it. And just for silver to catch up to its inflation-adjusted high from the 1980s would put silver around $209 an ounce. So this is where you get Bank of America talking about silver reaching $300 an ounce. You get Citigroup talking about silver hitting $150 an ounce just this year. The trend is set for silver to do incredibly well, and we're just starting to take off. And I'll tell you that gold always grows early and first. Silver grows a little later, but it makes bigger moves than what gold does. You get more volatility, but you get more growth as well. So we build out great diversified portfolios for our clients. Now, again, big piece of this is the stock market. This is the most overvalued the S&P 500 has been in American history by every single measure that economists look at. The average stock is trading 535% greater than its book value. In 1929, that was 400%. We're more overvalued today than during the Great Depression. The Buffett indicator, which is the total U.S. stock market compared to total U.S. GDP, is at 220%. Anything above 120% is in the danger zone. So we're double that. Now, there's lots of risks. Stocks are at all-time high. Gold and silver are basically at all-time high, although they've started to pull back a bit. You have to think about where's the risk, right? Every time the stock market goes higher, we're in the largest bubble in American history. There's tremendous risks that are facing that market. It's building in more and more downside risk on the stock market side, whereas gold and silver seem to be building in a very sturdy foundation at this stage of the game. So again, when investors are weighing those two options, how much higher can stocks go before something breaks? And we look at gold and silver and see that they're actually going higher because of fundamentals. Those are two very separate issues. And so I want to give you the setup of what we're walking into this year. And then, of course, war has broken out with Iran, and this has created a change in everything in the short term. So war with Iran has hit the U.S. economy through energy, through inflation, through interest rates, through credit stress, through global growth, and then market psychology all at once. The Iran conflict has already pushed Brent oil prices to above $110 an ounce, and it's disrupted the Gulf energy infrastructure. It's threatening shipping, and this led the Fed to emphasize that energy prices are now a key inflation risk. What that means is inflation again is going back up. We all expected the Fed to come into this meeting yesterday to cut interest rates because Trump's been harping on them to do that. And we are kind of teetering on this recession. We need to stimulate the economy to grow. But now inflation's back and it's a huge risk, and the Fed decides they can't cut rates. So understand the Iran war has effectively disrupted the Strait of Hormuz. Now, this is a choke point for nearly 30% of the world's oil and natural gas that flow through that. And these risks are causing an oil and energy price spike, right? So we have higher energy costs, which raise production, transportation expenses everywhere. They squeeze corporate margins and consumer spending because gas is already up sharply. So it starts to affect every part of our spending, our lives, our savings. And this really is mirroring the 1970s oil shocks that we saw, which reduced overall GDP growth in the US and it caused higher unemployment. Now, the 1970s was a very good time for gold and silver. And analysts are already warning of a broader slowdown of the entire economy. So you have these countries that are dipping into their emergency oil reserves, trying to keep prices down. But you have to realize that these nations, it's only going to provide very temporary relief. Those prices keep going up and they only have so much reserves before something breaks. Now, the most important concept that I want you to understand here is that an Iran war is not just a Middle East event. It's not just something for them over there. It's a global cost shock. If oil and natural gas and shipping insurance and fertilizer inputs and freight all rise together, this acts like a tax on the entire world. Consumers spend more on essentials. Companies face margin pressure. They're not making as much money and profit because those costs are going up. And then you have central banks that get more cautious and growth in general slows down. And that's a classic setup and recipe for stagflationary recession, which causes chaos in the markets and the economy. You essentially get slower growth plus hotter inflation. It's a very hard place to get out of. And when that hits markets, we get huge crashes. Now, how this hits the U.S. economy right now, think about this. The U.S. produces a lot of its own oil and gas. So we're a little insulated. We're less vulnerable there than Europe or parts of Asia, but it's not insulated from global pricing. See, if oil is going up globally, it's globally priced. That means that our oil will have to go up to keep that price as well. Now, if Hormuz disruptions remove barrels from the market or even make traders fear that they will, then U.S. gasoline, diesel, jet fuel, petrochemicals, plastic, agriculture, trucking, airlines, and industrial costs all feel that. Now, even if the physical shortage is abroad, those prices transmit globally. The second thing to look at here is that inflation is persistent, right? So if oil jumps and stays high, inflation does not just show up at the pump. It spreads into freight, manufacturing, food, airlines, chemicals, and really everything starts to go up. Now, this pushes headline inflation higher at a time where it was already very sticky. And the Fed is now, again, holding rates steady. They can't cut rates like they wanted to stimulate the economy and get more growth because inflation's so high. And they were, again, previously expected to cut rates, and the markets were kind of pricing that in. And now we see all of these markets reacting negatively to that news, both gold and silver and the stock market. So we've seen these pullbacks right now. But you have to think that stocks have more to lose if the bubble bursts. All these risks, again, at probably the most dangerous time in the stock market for American history. And you see gold and silver pulling back because interest rates aren't getting cut, but that's temporary. And if the stock market breaks, that's dramatic. So no rate cuts equal tighter financial conditions, which slows lending and investments. It causes stagflation. And then especially if that war drags on, we get an even greater recessionary hit to the U.S. So if households are forced to spend more on fuel and necessities, they cut back everywhere else. Investing, businesses face higher input costs, financing costs at the same time going up, hiring and capital spending weaken. And if Europe and Asia slow because they're more exposed to the imported energy, and that feeds back into the U.S., then exports and multinational earnings all go down as well. And so in other words, even if the U.S. avoids a direct supply shock with what's going on right now, it can still import a slowdown through trade, through earnings, and financial conditions. And that's exactly what we're beginning to see, and it's what the Fed is concerned about. So it's worth noting again that recessions are gold and silver's really best friend. right? So don't be afraid of this happening if you're looking to invest into precious metals. It's all being impacted in the short term, but that's a very good thing for gold and silver over the midterm. So it's market's worst nightmares. We usually see huge stock market crashes in recession, but what we see is that we get into a gold and silver bull run where these metals really start to shine and have their best performance. Gold and silver always see their biggest bull runs in times of recession and inflation. So again, we have a little bit of a shakeup in the market now, but these conditions are only better in the long term for where gold and silver are headed in the midst of an already dramatic bull run for precious metals. Now, also, we touched on government spending. The U.S. military costs are already at $3.7 billion in just the first 2 weeks here. Prolonged conflict balloons our deficit. It crowds out private investment. Defense spending kind of boosts GDP in the short term, but adds this fiscal strain. And when the government already has $38 trillion in debt, and we're spending over $1 trillion a year just to service that debt, we're adding billions more to our expenditures quickly stack up. And before long, the U.S. will be in an inescapable debt doom loop where we have to continue printing and spending, and we can't get out of that debt. And this is what major economists are warning us about. Again, it's why banks and individuals are fleeing to gold. Now, when we look at the stock market, where this hits stocks, we have oil shocks, we have no Fed cuts, we have higher volatility and lower earnings long-term for companies. And the index right now, the S&P, sits at extreme valuations driven by just a handful of AI names that have hype on them, but they have very limited proven revenues or profits. None of that is at scale yet. So we have all this expenditure going into the stock market, pushing these companies up, creating this mass speculation. And then you have war and inflation that exacerbate this whole risk. So war plus oil plus sticky inflation, no Fed cuts, that creates value compression in the index's biggest names, where these companies can't actually earn the profit they need to sustain these high valuations. And so to simply put it, expect a significant crash in the stock market if these conditions continue. And remember how I said that we're in this AI bubble? Well, the Iran war creates a significant risk here as well. Middle East nations are investing massive amounts of capital into artificial intelligence to diversify their economies away from oil right now. And the total commitments are reaching into the hundreds of billions of dollars. There's a combined about $2.5 trillion in U.S. technology investment that's aimed at securing AI infrastructure in the Middle East and these partnerships. So all of that is being disrupted right now. And again, the entire stock market bubble is poised on AI doing well and no disruptions. It's the most dangerous time in American history. It's the largest bubble in American history, and every condition seems to be threatening that. Gulf states have poured billions into AI infrastructure, and they're partnering with U.S. firms, and war instability disrupts these build-outs, and it causes delays in capital flows. It raises the risk premiums, and really the potential slowdown on the U.S. tech stock market is huge. It creates all these tailwinds that push against, or headwinds that push against the stock market. And so we're holding a massive balloon right now, and there's just a million pins that are flying right towards it, waiting for that bubble to pop. That's a very concerning place for us to be in. And again, when your entire net worth is typically poised in the stock market, it's a good time to start looking at other ways to invest to get risk off the table against those conditions. So I hope that's making sense. Again, I'm going to get some questions for you guys here shortly. Now would be a really good time for you to think about what you want me to address, or kind of any questions that come up as I go through this. And then we'll take a minute and go through all that together before I talk about the hows and whys of investing into gold and silver. I do want to touch on just a few more points here. A big one that was actually present before war broke out was this private credit market. We've started to see some huge cracks in private lending. What this is banks and institutions are loaning money to small businesses at a very high rate, trying to stimulate growth and give them an opportunity that traditional bank lending won't give. And what it does, it gives investors really good returns. So investors put money with the institutions, they lend out to these smaller businesses to give them a foot up, and they promise investors these really nice 10, 12% returns. But when there's a slowdown in the economy and growth, and you have these higher interest rates that have been on tab for the last year, year and a half, and all of these loans are coming due and repricing at higher rates, these businesses aren't earning enough to repay their loans at these high rates, let alone. And so what we've seen is this just complete disruption in the private credit market. Defaults are going up on these loans. Banks and firms are limiting their investor withdrawals so they don't collapse the entire system. And this puts a further strain on the economy when investors can't get their funds out, they're not getting good returns, and they can't invest other places. So private credit woes right now are compounding in the stock market to about $600 to $750 billion exposure right now to software and AI firms. So these disruptions, again, are creating bigger and bigger risks, not just to the economy, but to the stock market as well. So we're in a very unique situation right now where war is increasing debt, there's uncertainty in the markets. And so, again, we look at that and say, well, why are gold and silver pulling back? Every condition seems to be favoring precious metals, but why are we getting a pullback on the market right now? So what I really want to impress upon you here is that this is kind of the most misunderstood part. Gold and silver can drop first and still be bullish later. Wars cause the stock market to become incredibly volatile. Investors tend to sell what they can during stress to raise liquidity or meet margin calls, and gold and silver are very easy liquidity in people's portfolios. And so you do get this quick sell-off when you see volatility in the stock market. Now, that's part of it. It's also worth noting that gold and silver do not always rise immediately in a geopolitical crisis. They often rise over the medium term, but in the short term, they can fall, which is what we're seeing. And so gold and silver pulled back, but again, it's very short term. There's concerns about recession and inflation. That means that the Fed doesn't cut interest rates. We've kind of talked about that. They will cut rates later on. They have to. We've had Jerome Powell saying that they will indeed cut rates, but in the short term, they're holding. And gold and silver like low interest rates. And so you get this temporary sell-off there as well, just a sentimental shift. But you have to realize that precious metals have done incredibly well, and the vast majority of their growth that we've seen so far have all been in high interest rate environments. So really it changes nothing. Again, it's a very short-term sentiment shift. We get a pull-off, and what it's giving you as an investor is an incredible opportunity to get into gold and silver at a valuation we didn't have a month ago. This pullback is a gift the market is giving you to actually get protection when you need it. And so there's been no rate cut. The dollar has kind of strengthened as stocks sell off, and there's this rush to cash and treasuries. In the short term, the dollar often strengthens because it's still the world's reserve currency, and it's the deepest source of liquidity, and it's kind of a haven in global stress. And so the dollar strengthens, gold pulls back because they're inversely related. But again, this is all very temporary. The fundamentals on government debt, the spending, the inflation, that's all still there and getting worse. War creates uncertainty. Markets hate uncertainty. And with prolonged disruption, sticky inflation, recession fears, you have the classic gold and silver tailwinds that are going to push that market higher. So everything that I'm telling you, I want you to get this idea of the big picture on why gold and silver are in a bull market and doing incredibly well. And then look at this short-term picture of what's going on in the Middle East, the war with Iran, whether that gets resolved in a month or 2 months or a week. These conditions are all changing dramatically, but it's giving you a great opportunity to get into gold and silver, and it's creating an even better condition for gold and silver to grow long term. Now, central banks are continuing to buy. They're diversifying away from the US dollar, okay? Banks, institutions, investors, they're seeking physical hedges against fiat debasement and geopolitical risk. Private credit, banking stress also adds to demand. And we have a historical precedence where oil shocks lift precious metals after initial rate-driven dips. So these oil shocks will push gold and silver higher. Now, if we see de-escalation or the Fed pivots later, right? So if the war starts calming down or the Fed decides to start cutting rates, which again, they will at some point, you can expect huge surges in pricing for gold and silver. Now, Citibank is still calling for silver to hit $150 an ounce this year. And again, Bank of America has doubled down, signaling silver to hit roughly $309 an ounce if their, kind of pathway plays out here in the short term. And gold is expected to be at $6,000 or $7,000 at least by the end of this year. And so again, if you get in today and you start investing into precious metals, you're so well positioned for the growth that's expected as we go forward here. And I really want to impress upon that you have this opportunity to get into gold so much cheaper today than even a week ago. But, we look forward in a couple of months, none of that's going to matter. You have to get into precious metals just in general, buy in the range that we're at. If it goes up a little bit, great. If it goes down a little bit, great. Because we're in this bull market, eventually these values that we're at today are going to be long gone in the rearview mirror. So just, get into the market when you can. And I hope that you understand why gold and silver had a quick pullback now. Just, it's actually, again, a gift to be able to get into the metals cheaper in the midst of what's most likely the largest and longest bull run in American history for precious metals. Secretary of Treasury, Scott Bessent, has said that gold is my number one holding in my portfolio. Every American should have it. It's going to do incredibly well moving forward. Okay. Banks are starting to tell clients to hedge 25 to 30% of their portfolios into gold. And that's when you have a problem with the greater economy in the stock markets, is when banks and institutions are saying hedge with precious metals and do a greater and greater amount. Now, gold and silver are that tried and true, that trusted asset for safety and stability in economic crises and risky markets. And we're seeing that play out everywhere we look. And so even though precious metals have been growing and doing amazing, we're not finished with gold and silver yet. We're still getting started, and we're very early on. I would say that we're still in the second or third inning of about a 9-inning game overall. So again, you're getting in at the right time. Whether gold's up a little bit or down a little bit, this is the range that we want to be picking up precious metals at. Wells Fargo is saying that gold will be at $6,300 by the end of 2026. JP Morgan laid out this path for gold to be at $8,500 an ounce by the decade's end, so just the next couple of years. Now, other banks are saying $6,000 an ounce, $7,000 an ounce, $8,000 an ounce just this year. We have a commodity super cycle where gold could be at $10,000 an ounce by 2030. So these are the top investors, analysts, investment banks that are all calling for gold to go dramatically higher. Michael Widmer, the head of metals research at Bank of America, again, has said silver could reach $309 an ounce just by the end of 2026. And what's really kind of impressive to me is Jamie Dimon, the CEO of JP Morgan Chase, has come out and said, I don't often say this, but this is one of those times that you as an investor need gold. To see gold hit $7,000 an ounce or $10,000 an ounce, yeah, that's going to happen. Goldman Sachs has reiterated its bullish stance on gold, calling gold its highest conviction trade. And even after the wild swings that we've seen in gold over the last 2 months here, analysts are treating dips as buying opportunities, and their targets keep rising because demand is sticking around. It's not going anywhere. Everybody wants gold and silver right now. And so ask yourself really quick, how do you feel about the current state of the market, the economy, the war? Are you concerned? If you're not really confident in where things are headed, this would be a great time for you to get a hedge. And again, in our opinion, looking at the economic landscape, this is hands down the most important time ever to own precious metals. As long as we're devaluing our dollar, gold will keep going up against that, and silver will follow. Now, again, Ray Dalio said gold should be in every investor's portfolio. It's a unique diversifier with no credit risk. It performs when stocks, bonds, and other assets don't. So now we're going to talk about how you can invest into gold and silver. But I do want to get into your questions. I'm going to take a couple of minutes here. So again, I hope you've been writing some of those. I'll jump into that and we'll answer it. And then we'll get into the hows of actually investing into gold. And we can wrap it up here. But that is the best part. Obviously, I hope you guys get a good sense of why the economy is pushing gold and silver, what's going on in the macro and the micro. But then we'll talk about the actual steps you can take to get yourself protected. And again, I do want to remind you that you can call us right now at 866-607-2447, and we can discuss all of this in more detail with you, as well as your personal situation, get right to the heart of things. We do have our account executives on standby waiting to help. So feel free to just go ahead and call them right now and jump right into it. You will get a replay of the rest of the webinar if you want that. But I hope at this stage, you're feeling that sense of, okay, I see it. There's a lot to be concerned about in the economy and the markets right now. I see that gold and silver is this stability, this hedge, this alternative investment I can get into to actually protect what I've worked my entire life to build up. I don't want to risk it in the market. I don't want to risk it with the devaluation of the dollar. Let me start getting some protection. And so again, the next thing for you to do is actually take a step to do it. Whether it's a cash investment or a retirement account, you have an opportunity right now that you're going to thank yourself for the rest of your life that you actually did it if you take those steps. So give us a call and we'll talk about how putting precious metals into your account can actually help you. Now, I'll get into the questions really quick here before we move into the how. So Kirby says, what portion do you recommend to do gold versus silver? This is going to be different on one day to the next. In general, right now, we lean on gold for preservation. We lean on silver for growth. So gold is going to be a lot more steady and stable, consistent, predictable. Silver is incredibly undervalued compared to gold. There's tremendous upside expected on silver as we go forward. You're going to ride out a little bit more volatility on that side, but you get the growth. And so we like to do a mix, usually a 60-40 split one way or the other. And it depends on your investment objectives, your time horizon, your liquidity need. All that's important. Francis says, where do I begin in the investment process of gold and silver? So what I would tell you, Francis, call us. You've already taken the first step by being here on the webinar, but give us a call and we'll talk to you about what you're looking at doing, how much you have that's off the side that you might want to get protected, whether it's cash in the bank or a brokerage account or retirement accounts, old 401ks, IRAs that are sitting there exposed to the market. Take a portion of that and get it protected into gold. That's where you start. We do have great information kits that if anybody needs something physical to kind of look through to better understand our company, our marketing department has put together really incredible information that we can get some of this out to you. We also have an entire digital library where we can email you videos, we can email you guides and things like that. But you're never going to learn more than just by having a conversation with our account executives. So Francis, I would encourage you to just go ahead and call the number and get into a specific individual conversation right now and actually take that step. Gordon says, everyone knows how to spend $100, but if needed, how do I convert gold into money? Do I sell an ounce of gold and just say get $5,000 worth? Great question. So that's a question that we get asked a lot is I've got gold, now what? But it's no different than your stocks. You put stock or an investment into stocks, it grows and you need that money. You can't take your stock to the grocery store. You have to sell it, get the cash, and then go spend it. Now, this ounce of gold, now this is a proof set. I don't know if you can see that, just incredibly beautifully struck by the U.S. Mint, very high relief. This is just common bullion. This is an American Eagle 1 ounce coin. That's worth, about $5,000 today. So if you have to sell that, you're wasting all of your future investment potential because you have to sell $5,000 at a time. So what you can get into is things like a half ounce or a tenth of an ounce or a quarter of an ounce. So there's options. There's smaller fractionals of gold that give you more liquidity, more usability. And we have, of course, silver, which is way cheaper than gold. So we always say gold to buy the bakery, silver to buy the bread. So there's options, but we have a buyback commitment to our clients. Whenever you need to spend your money, just sell back to American Hartford Gold or anybody, because gold is demanded all over the world, and then go spend the money that you need to, meanwhile leaving the rest of your investment so that it can continue to grow. Kirby also says, where do you recommend storing the metal? So I'll talk about that. If you do the IRA, it has to be stored for you to private depository. If you do a cash investment, put it in a safe, take it to a local bank if you feel comfortable with that. There's options, or we have private depositories where we can store your metals. And then Anthony says, these gold purchases are physical gold. How is it shipped? So yeah, great question. This would maybe be a good time for me to jump into the hows, and you'll get a better understanding of both options here. So understand that gold is long-term a store of value. It's a hedge against inflation. So it maintains its purchasing power, and it's really meant to safeguard your gains against erosion of value. But you can also think of it as protection and hedge, like an insurance policy for your wealth. And then in the short term, gold and silver is just a terrific investment because of the conditions that we're in right now. So I want you to think about those two options: immediacy for gold and silver to do incredibly well, and then long term for gold and silver to be a store of value. Now, the way that it works is we help our clients in two ways. So we have a cash investment where we'll ship gold and silver right to you, or an IRA or 401k, old retirement account, where you can put physical, tangible gold and silver into an IRA and have it stored for you safely and securely, but get your investments out of the stock market for your retirement accounts. So a couple of options there. On the cash side, it's very simple. The minimum is $5,000. We do anything from $5,000 to $30 million. It just depends on what you have that you want to protect. You would call us up. We'll go through a bit of a consultation. We'll build out a 7-digit client ID for you. We'll send you the payment instructions. You'll do a wire transfer or a check. It can be a personal check or a cashier's check, bank check. But you do a wire transfer or a check over to American Hartford Gold. Now, once we get those funds, we'll do a full consultation with you. We'll help you select the metals that you want, build out a portfolio, and then we ship that gold and silver right to your door. It's fully insured. We cover the shipping cost. There's no sales tax. We ship via FedEx in an unmarked package. Nothing says gold or silver on the box. We've shipped $4 billion worth of gold and silver around the country this way. Never really have any issues with that. You'll sign for it upon delivery. If there was ever an issue with your package not showing up, you'll call us. We'll get it handled for you. It's all insured. It's all on us until you sign for it and take possession. So very easy process. We'll ship it right to your door. If you don't feel comfortable having gold and silver on hand, we can open up a private depository for you. That's always an option. Again, I would encourage you to talk to our account executives and they'll walk you through that. But then once you have the gold and silver, if you ever want to sell it back to us, you just call us up. We'll get you a buyback bid. We'll send FedEx to your home with packing material and a shipping label. You box it up, send it back to us. We wire funds into your account. It's incredibly easy. So that's the cash side. So cash in the bank, a brokerage account, anything that's not retirement funds, that's that process. For those of us that have old 401ks or IRAs, and again, a little concerned about where the economy and the markets are headed, you can put physical, tangible gold and silver into your retirement account. And what we do is we open up what's called a self-directed IRA. It's a quick application, takes 5 minutes. We send it over to you for a signature. And our back office will do all the heavy lifting to roll your funds over. So we do a custodial call with your current custodian. We help you liquidate whatever funds you want to roll over. We get the transfer form submitted. We're going to keep our thumb on the process the entire time until those funds come out of your current retirement account into the self-directed IRA. And then again, we go through that consultation. We build out a portfolio. We ship that gold and silver to a private depository. So this is a third-party vault. It's outside of the banking system. You own that gold and silver. You can access it anytime you like. It just has to be stored for you safely and securely because it's a retirement account. It's about $250 a year, roughly, for storage and custodial fees combined. That covers everything. We as a company will cover the account setup in the first year of storage for you, and then just $225 or $275, depending on how you have it stored per year after that. So it's very easy, very moderate. And then again, you own physical gold and silver in your retirement account. At any point in time, you can sell it back to us inside the account. It's tax-free and penalty-free to do that. It's tax-free and penalty-free to roll those funds over as well. And then if you want to ever take possession of the gold and silver, you can request that this gets shipped right to your home out of your retirement account, and it's considered a distribution on the account, just like if you sold stocks and took out cash. But there is a great tax savings when you do this with gold and silver. I'm going to leave that part for you to talk to our account executives. They can get into the details on that and help you better understand it. But what I really want to impress upon you is you own physical gold and silver into your retirement account. So if it's a current employer plan, a 401k, a 457b, or 403b, any current plan, you have to be over 59 and a half to be able to roll those funds out in most cases. Or if you've ever rolled over previous employer's plan into your current plan, usually those funds are available to move even if you're not 59 and a half. Now, if you have an old employer account, you've left employment, it's sitting there, that is almost always going to be able to be moved over. And then if you have an old IRA, Roth or traditional, you can move those into the self-directed IRAs as well. So there's a lot of options for you to get physical gold and silver into your retirement accounts. Either way, we have clients that typically do both, a little bit of cash to get gold and silver on hand, and then of course, protecting the majority of your net worth in the retirement accounts. So 2 options. And, make sure that you do actually call us if you're interested to take that step. So it's 866-607-2447. Now, really quick, why American Hartford? Obviously, you're with us on the webinar, so you know who we are. We're the largest precious metals dealer in the US. We've shipped over $4 billion in precious metals just over the last couple of years. We've been in business over a decade. I'd encourage you all to visit our About Us page. There's a welcome video there. You can see our president, our CEO, our sales team, our shipping department. Really get to know who you are dealing with here and get a sense of the company that you're partnering with. We really put ourselves out there so that you can know who we are. We've been awarded numerous awards from Inc. 5000, which is keeping track of the most prestigious businesses in America, the fastest growing business in America. We've got a full service team that's dedicated to making this a very smooth and easy transition for you to get out of the dollar, out of stocks, out of bonds, whatever it may be, into precious metals. We're going to hold your hand through and through. You're never going to be alone in this process. A+ rating with the Better Business Bureau, thousands of positive reviews online. And what it really comes down to is you want to be with a company that's going to be educational for you, that's going to make it very simple and easy, that's going to be here to buy it back. We're the only firm in the industry backed by private equity, which means that we always have liquidity to be able to buy your metals back from you. You're just never going to be alone in this process. And we really pride ourselves on taking care of our customers and our clients. So if you're interested in this, please give us a call. Actually take that step to protect and preserve some of what you have. There's just never been a more important time to do that. And you're with the right company. And again, we'll do everything we can to help you get comfortable, to help you get a sense of how this works. You will be leaning on our expertise a bit here, and that's great. That's what we do. We're here to help you. And so again, I just want to impress upon you now, there's never been a more important time than now to own gold and silver. I'd rather sell you gold and silver now as opposed to silver being over $100 an ounce again and gold being back up over 5,000. Get in while your instincts are kicking in and they're urging you to take a step. Gold and silver were flying. Silver broke past the 1980s high and then it doubled in a month, right? That's what you can get out of metals. Now, there's always going to be volatility in war. It's triggered drops, but this is really just a healthy, normal correction in the midst of just amazing growth that we were seeing. So we're still higher than where we started at the beginning of the year. So don't feel like this is changing anything. It's just giving you a quick breath. Gold is the safest money in these environments. Don't look at gold as a volatile investment up or down. Look at it as an effective diversifier. Ask how much of a percentage of your portfolio would be wise to have secured, and then just keep that percentage in precious metals. It's a great diversifier against everything else. It goes up in times of trouble. It stays consistent in prosperous times. It's safety. It's the most important thing, just to have a well-diversified portfolio. And so I just want you to think strategically about this. How much do you want to diversify, just knowing that you have something protected? Now, if the average US investor just increased their gold holdings by 1 to 2% alone, that would push gold to over $8,500 an ounce. This is coming from JP Morgan analysts. So in times of concern, market fears, everybody starts looking at precious metals. And if just a 1% increase happens for the average US investor, that pushes gold above $8,500 an ounce. It's a very, very believable scenario, and we're stepping into it right now. The total gold supply has only increased 1% last year, and yet that demand is going through the roof. That's a recipe for huge growth. Now, this is potentially a once or twice in a lifetime event that we're witnessing right now, and you have the opportunity to participate in both making and preserving money at the most critical time for US investors. Again, CNBC is saying gold at $7,000 an ounce at the end of the year. Deutsche Bank saying gold at $6,000 an ounce this year. JP Morgan, gold at $8,500 an ounce. Wide ranges, but what we see is those targets get hit. Gold is the hedge against economic and geopolitical risks that can't be diversified any other way. And so I'm going to leave you with a few thoughts aside from the immediate concerns of the war and how that might trigger a recession or a stock market crash. There's some bigger things to look at here. The US is seeing a significant slowdown in jobs growth. That slowing growth is weakening unemployment, and that we see that we're really moving into a place where the Federal Reserve is going to have to cut rates eventually and print more money. That printing of money will increase inflation. It's going to devalue the dollar further. It'll drive up government debt, decrease foreign confidence in US bonds, treasuries, even stocks, and the dollar. and drive up the price of gold and silver significantly. These are the tailwinds that are pushing metals up. And it's interesting to note that the monetary system that really defined the post-World War II era, where the dollar really has reigned supreme and everyone happily held U.S. bonds, that's shifting. It's not going to happen overnight, but it's unmistakably happening across the world. So for investors, that means rethinking your portfolios and not having all of your eggs in the paper basket backed by one currency. Consider having hard assets like gold and silver. Watch the central banks. Watch how they behave. When the world's smartest money managers start buying gold in mass, that's worth paying attention to. And the share of gold in central banks, again, has doubled in the past 10 years. It's more than 25% of central bank holdings. That's the highest level in 30 years. So if banks are hedging about 25% of their portfolios in gold, what should we be doing? Investors, both private and sovereign, believe that their strategic reserves are no longer safe in dollar terms. The dollar is losing that credibility, and it's no longer that anchor of the global monetary system. The Fed is losing credibility, and Congress is losing credibility. And so it's time for you and I to own gold and follow the smart money, get out ahead of this entire mess. And these geopolitical tensions are clearly not fading into the background. We're now entering a world where it's a strong demand to secure critical materials in this decade, and not just on the individual level, but by entire governments and countries, and they're leaning on precious metals. Now, Timothy Moe of Goldman Sachs sees that geopolitical risks nearing an inflection point for the markets, potentially tripping stocks into a correction territory. And when you have such a large bubble on stocks, if that bubble bursts, there goes everything everyone has worked so hard to build up. Gold is outside of that system, and it provides real stability away from Wall Street. So I hope that kind of gives you this idea, right? Wise investing is just risk management. Gold is far outperforming traditional investments and markets. There seems to be nothing but risk and uncertainty on the horizon. The dollar's plummeting. The U.S. is moving into a recession. Countries are moving out of U.S. bonds and treasuries, and they're moving into gold. So follow the countries, follow the banks. There's a reason that all major financial institutions are leaning on precious metals in this season, and that's something that you and I should do. Central banks, billionaires, and history are telling us that gold is the place to be right now. The bond market, equities, equities, stocks, and currencies, they're just far too volatile for your retirement. So as we wrap this up, call us. You joined us this long. You've taken the step to be here. You clearly have concerns. Call us. 866-607-2447, and we'll discuss getting started with you. And I want to thank you for being here with us. I'm Machi Block with American Hartford Gold. Give us a call. Actually take that step and get yourself protected.